Hello students, in our previous lecture we are start a unit number second in paper second, that is deductions from gross total income. In our previous lecture we are studied a section 80C, 80D, 80 double D. Okay, so section 80C is related to deduction in respect of investment or contribution of SAC. Okay, so in section 80C we are studied a deductions related to investment or contribution. So the maximum deduction is allowed under section 80C is rupees 1,50,000. Okay, so investment, the SAC will invest income in provident fund, in national savings certificate, in Jivan Dhara scheme, in life insurance premium. The SAC will take the LIC for himself, for spouse, for children. Okay, so we also discuss the deductions in respect of investment or contribution of SAC. Okay, so here for LIC, if the SAC will take a insurance policy, then allowable deduction we also discussed it in our previous lecture. As well as we studied a section 80D which is related to medical insurance premium or mediclaim or health insurance premium. Okay, in this section the allowable deductions is for normal person if the SAC will paid a premium for self, spouse or children and the SAC is below the age 60 years, then allowable deduction is rupees 25,000 or actual insurance premium paid, whichever is lower, is allowable in respect of the deduction under section 80D. Okay, some conditions is given to you here about the deductions. The expenses or the insurance premium is for spouse or dependent children, then this deduction is allowed for that SAC. If the SAC will contribute income in central government health scheme, then these deductions is allowed to that SAC. Okay, so we already studied this section in our previous lecture. Then we studied a section 80 double D which is related to a medical treatment for dependent or a medical treatment for handicapped person. Okay, so we studied a eligible SAC. Okay, as well as payment qualify for deductions and quantum of deductions, which means the actual amount deducted from gross total income is given here. If the SAC is if the SAC is not severe disability, then allowable deduction is rupees 75,000. If the SAC or the dependent person's disability is severe, then the allowable deduction shall be rupees 1,25,000. Here severe disability means the disability above 80% or more disability. Okay, so we studied these sections in our previous lecture. Now we are going to discuss the section 80DD, and this section is related to medical treatment for normal person. Okay, so in our section 80DD we studied a medical treatment for handicapped, but in section 80DD which is related to a medical treatment but for normal SAC. Okay, it means normal persons. So here eligible SAC is given here. So eligible SAC is under this section provides deductions to an SAC who is resident in India, being an individual and HUF. The deduction is available to an individual for medical expenditure incurred on himself or dependent. It is also available to HUF for such expenditure incurred on its members. So this deduction is allowable to the SAC who is a resident in India and being an individual and HUF. HUF means Hindu undivided family. The allowable deduction is to individual for medical expenditure incurred on himself, means the medical expenditure incurred on SAC or SAC's dependent person. Okay, so this deduction is allowed to that SAC. It is also available to HUF. So this deduction is also available for Hindu undivided family for such expenditure incurred on its members. Okay, so the member of HUF, okay, so expenditure incurred on member of HUF shall allowed deduction under section 80DD. So here meaning of dependent. So it is very important. The dependent person, who is dependent person, is very important. So first point is given here, individual SAC. So the spouse, children, parents, brothers or sisters of the individual or any of them wholly or mainly depends on such individuals for his support and maintenance. Okay, so the medical expenditure incurred on that dependent person, for example for spouse, children, parents, brothers or sisters. Okay, then these deductions will be allowed for that SAC. Here second point, HUF. In HUF the dependent means a member of Hindu undivided family wholly or mainly depend on such Hindu undivided family for his support and maintenance shall allow these deductions. Okay, so in Hindu undivided family, if a member of HUF is wholly depends or partly depends on such HUF shall allowed for deduction under section 80DD. Okay, so these are the meanings of dependent in individual SAC and HUF. Okay, now payment qualifying for deduction. So under this section the amount which is allowable for deduction is given here. So payment qualifying for deduction means any amount actually paid for the medical treatment of such diseases or elements of as may be specified in the rules made in this behalf by the board of himself or dependent in case the SAC is an individual or for any member of HUF in case the SAC in a HUF will qualify for deduction. So this deduction or this deduction is allowed for the specific diseases. Okay, for example a diseases include cancer. Okay, so this expenditure is allowed for deductions. Okay, so here the deduction or quantum of deduction is given to you. The amount deduction under this section shall be equal to the amount actually paid or rupees 40,000 whichever is less. So actual expenditure incurred on medical treatment or rupees. So here the amount of deduction, the amount of deductions under this section shall be equal to the amount actually paid or rupees 40,000 whichever is less. So here the actual expenditure incurred on the SAC or the dependent or rupees 40,000, whichever is lower is allowed for deduction under section 80DD. Okay, in case the amount is paid in respect of senior citizen, so this deduction is allowed for normal person. Okay, normal person. Okay, which means age below 60 years. Okay, age below 60 years. Okay, the allowable deduction is actual expenditure incurred on medical treatment or rupees 40,000, whichever is less or lower. Age below 60 years. Okay, so remember this. Now we are studied a deductions in respect of senior citizen under section 80DD. In case the amount is paid in respect of senior citizen, that is a resident individual of the age of 60 years or more at any time during the relevant previous year, then the deduction would be the actual expenditure incurred or actual expenditure paid, or rupees 1 lakh, whichever is lower. Okay, so remember this, the allowable deduction for senior citizen under section 80DD is actual expenditure incurred or rupees 1 lakh, whichever is less is allowed for deduction from gross total income under section 80DD. Okay, now we are going to discuss another deductions, that is section 80E. Okay, so section 80 is section 80E related to deduction in respect of interest loan taken for higher education. So 80E is related to deduction in respect of interest loan taken for higher education. So 80E is related to interest on education loan only. Maximum period is 8 years. So the interest on loan is given here. So the allowable deduction in respect of interest on loan, so here eligible SEC is given here under section 80E. Provides deduction to an individual SEC in respect of any interest on loan paid by him in the previous year out of his income chargeable to tax. Okay, so that SEC will be eligible for take a deduction under section 80E. Here some conditions is given. Condition: the loan must have been taken for the purpose of pursuing his higher education or for the purpose of higher education of his or her relative. The loan must have been taken from any financial institutions or approved charitable institution. So the allowable deduction of loan interest, the eligible SSC will get a deductions under section 80E, and the condition is given here. The SEC will take a loan for the purpose of higher education or for the purpose of higher education of his or her relatives. The loan must have been taken from any financial institution or approved charitable institution. So this condition is very important. And another condition is given here: the loan is sanctioned in the financial year 2018-19 or 1920. Amount of sanctioned loan does not exceed rupees 35 lakh. Okay, so the loan does not exceed rupees 35 lakh. Value of house property does not exceeds rupees 50 lakh. So the value of house property of that assessee does not exceeds rupees 50 lakh. Assessee does not own any residential house on the date of loan sanction. Okay, so the date of loan sanctioned, on the date of loan sanctioned, the assessee will does not own any residential house. Okay, so the loan is taken for purely higher education purpose, for self or for relatives. Okay, then this deduction is allowed for that assessee, and the deduction or interest payable on loan from any financial institution for the purpose of acquisition of residential house property, maximum deduction is rupees 50,000. Okay, so the allowable deduction is 50,000 in respect of section 80 double E, but we are study a section 80E, and which is related to a higher education purpose. Okay, so the 80E, loan taken for higher education, maximum allowable deduction up to 8 years, and the condition is given the loan is taken for the purpose of higher education for himself means for assessee, or for the purpose of higher education of his or her relatives. Okay, and the loan is taken from financial institutions or approved charitable institution, then these deductions under section 80E is allowed to that assessee. Okay, next one is section 80U, and this is our last section of this topic, that is section 80U. Section 80U in case of a person with disability. Okay, so this section is related to the deductions in respect of a disabled person or blind person or handicapped person.